Hi, I'm Mangan and I'm joined today by Carolyn Krampitz from our Hamburg office. We're here to give you a 4-minute summary of government proposals to start screening foreign direct investment, known as FDI, into the UK.
It's clear that the proposal will have a major impact on our clients, one on which AG is well placed to advise.
Currently, for transactions exceeding certain thresholds, the Secretary of State can intervene on the basis of public interest considerations like national security, media plurality, and the stability of the financial system. The Competition and Markets Authority, or CMA, then conducts a review similar to the one it's just completed on Advent's proposed acquisition of Cobham, and reports back. It looks fairly similar to a merger control process, but the Secretary of State is the ultimate decision maker.
But for some time now, in line with the global trend, there's been mounting political pressure to broaden the UK system.
Yeah, so initially the UK experimented with amending the Takeover Code in order to allow it to extract concessions from FDI. The first example of those powers being put in place was the SoftBank acquisition of Arm, whereupon SoftBank committed to maintain the global headquarters of Arm in Cambridge for 5 years. Ultimately though, it was felt that a specific regime was going to be required, so in 2018 the government consulted on 2 sets of measures. Firstly, an interim quick fix, and secondly, a longer-term set of proposals. The interim measures have already been implemented, significantly lowering the intervention thresholds in acquisitions of companies that develop or produce military or dual-use items, CPUs, or quantum technology. The longer-term proposals, however, would be a much more significant development, more akin to CFIUS in the US or the German foreign trade regulation. Carolyn, could you tell us a bit about recent developments in Germany?
Yes, the regime became significantly more onerous in 2018, and for critical industries can now be triggered by the acquisition of just 10% of the voting rights in the target. And critical industries are extremely broad and include military, software, cloud computing, utilities, health, transport, nutrition and media, and much like in merger control reviews, the authority has the power to either issue a prohibition or impose condition on approval.
Okay, so unsurprisingly fairly similar to what's being proposed in the UK. Here's a short summary of what's currently envisaged. The Queen's speech confirmed the government's intention to introduce a whole new regime, replacing existing provisions. The regime will apply to acquisitions of control or significant influence over any entity or assets through share and asset sales, as well as land transactions. It can look at any markets which could give rise to national security risks. It's expected, though, that the focus will be core infrastructure such as energy, communications, transport, defence and advanced technologies, as well as critical suppliers to government and the emergency services. There are no safe harbours or minimum value or size thresholds. Transactions that raise national security concerns will be fully assessed. If the government concludes the transaction presents a national security risk, it will be able to impose conditions or block it entirely. It will also have powers to fine companies for non-compliance. Carolyn, there's something related happening at EU level, right?
Yes, the UK plans reflect action being taken at EU level, where a new framework for screening FDI into the EU will come fully into force from October 2020 and, among other things, will provide a mechanism for cooperation between the member states on FDI.
Okay, so a lot of change coming, but a lot of experience and expertise already in the firm.
Yes.
Here's Matt Butter from our Global Investigations team.
So a big part of our team's practice is advising on international trade requirements, such as export controls and sanctions. For example, we have specialist expertise in carrying out export control classification reviews. This puts us in a really good position to be able to identify and take into account national security considerations at an early stage in the deal process, and avoid complications and delays further down the line. When the government bulks up its foreign investment powers, we'll be working closely with the competition team, and the firm will be able to offer a unique skill set to clients in this area.
The new screening mechanism would work in a very similar way to UK merger control, incorporating a voluntary notification process with the power of the authority to call a transaction in for review in the event that the parties choose not to notify. Most commentators expect the CMA to be handed the role. FDI will then become an important consideration when approaching any transaction. At present, the government expects 250 notifications per year, with conditions imposed in potentially up to 50 of those instances.
We'll be closely monitoring developments to keep colleagues and clients up to date. And in the meantime, don't hesitate to be in touch to discuss.